Good morning, welcome to the market view for Tuesday the 10th of June 2014. Starting off with the 30-minute chart, we can see that yesterday morning the market moved higher, then reversed with some selling. We can see the selling is shown in this bar here. Also, we have a red volume bar in this green candle as well, which indicates some sort of selling pressure coming into the market. This is then confirmed, and then eventually the market moves down towards the scalp target there at 167.82. The market finds support in this area and then starts to work its way back. Unfortunately, it didn't quite make it to the scalp, and therefore the most on this trade to the low of this bar was around 19 pips. You see the market also taking out the psychological support there at 168. It took a moment or two to break it, but eventually it broke and then just traded down towards the low of Friday there. So a maximum of 19 pips there, and really all that would have been made if you tried to hold this trade, taking the green bar that comes into the market here as some sort of support. You've got around, let's have a look, we've got 167.97 there and 80, so around 3 to 4 pips max if you're trying to hold this in the hope that the market would continue and move down again, which on this occasion it didn't. So around 19 pips max and 3 pips trying to hold the trade for the longer term, but the market's very quiet because of the lack of news this week, which we'll see in just a moment. So moving on to the daily charts, we can see yesterday the market very quiet. Just get the chart to move. So you can see the market very quiet yesterday, an inside trading day against Friday, and what I mean by that is the low and the high are inside of the high and the low for Friday. So this is what's known as an inside bar. So price is stuck inside of the range of Friday, finding support at the 168, and just very, very quiet. Again, this sort of calm before the storm situation that we have. We sort of have a few days sideways, get some sort of movement, as you can see here, and then we go back into this sort of consolidation phase as the market is undecided on what to do. And I don't suppose really this is going to get any better, because today, news-wise, we just have manufacturing production. This is out at 9:30 p.m. This is forecast to come out slightly less by 0.1. I suspect it will come out more or less the same, and again not too much of a move off it unless they want to use it to move the market, because at the moment there's no news to move prices, and they obviously are being watched by the authorities in the event of moving prices without a good reason. So any sort of news item, if they've got orders to fill, will be used in order to do that. So watch out at 9:30, even though it's not really a major economic news item like the CPI or the unemployment figures. It is one that could be used to move prices around in their favour if they have large orders to actually fill. So that's really it this morning. It's just very quiet. There's nothing we can do about that except, to see it through, and then eventually the storm will break, which it will. It always does. And then we'll be off to the races with some decent size moves in the market. On the Dow Jones front, the implied volatility stuck in this sideways range. You can see that we've got this sort of coiling effect now of the implied as well, which I've never seen either. This is now stuck in a sideways move. The historical has actually dropped again during yesterday. We're heading back to these lows. So we're on the sort of the cusp of a decent correction inside of the Dow, which continues to move to the upside. I'll show you the daily chart of this. Let me just find it for you. I'll just get the right one. And let me just change this to a daily chart somewhere in here. And there you can see the market moving up It's just sort of vertical, which is what's known as a melt up or a parabolic move to the upside, and eventually it runs out of steam, and before you know it, the market is actually correcting. So no surprise here, and I personally wouldn't be surprised to see this market go to 17,000 before we actually get the correction as well. It's a big round number, psychological number, and also has the prospect of pulling a lot more people in who see that there's no risk in the market at the moment. I mean, this is the problem. We're back to sort of 2007, where everybody believes that nothing can really go wrong. And then, of course, the market's hit with the bank problems and all the rest of it. What will be the catalyst this time, I don't know. But I'm sure there's something looming around the corner, because this is certainly not right at all, that the market can continue to go on at the rate that it is. I mean, if you have a look at the monthly chart, you can see there that we've just got this huge climb from 2009, funded by government debt. No doubts about that. The volume's dropping off like it's gone out of fashion. I mean, you can see now where the last 3 months the market volume has been dropping off. This is because corporations are buying their own shares back via bonds, and this was in a brilliant video by Max Kaiser's show, which is on Russia Today, which I will include the link in the email message today, so you can watch it. Very, very good explanation there of why the market is going up as it is at the moment. And speaking of which, if you want some more really good news sites where you want the real news and not the mainstream propaganda from Bloomberg or CNBC, you want to have a look at Zero Edge. This is absolutely brilliant. Great articles in here that take apart what really is happening with the numbers, and also within the stock market as well. And also Testosterone Pit is well worth a read as well. You can see last time this happened, the financial crisis broke out. I haven't read the article yet, but well worth a read this morning, which I certainly will be doing, just to see where the parallels are from 2007 to here, as the market trades at these lunatic highs is probably the best word for it. So really that's it for this morning. There is going to be some volatility around the corner. There's no doubts about that. The markets are far too quiet, unless this is the new normal, because things have changed during the last few years, and fingers crossed this is not the case at all. And personally, I can't see it, and this is something they spoke about in 2007, saying, especially good old Gordon Brown with his there'll be no more boom and bust, those prophetic words, until, of course, the banking crisis came along and took the rug from under those proverbial words. So, like I say, it's just a matter of being patient and waiting for this next major correction to come, and it will. It's just a matter of time. So hang in there and wait for those big payoff days, which are just around the corner, in my opinion. Right, well, that's it from me. All things being equal, I will see you in tomorrow's Market View. And have a great day, and as ever, thanks for watching.